SpaceX's $1.75 trillion IPO lands Friday. Investors are asking one question: why now? SpaceX is reportedly set to list on the NASDAQ under the ticker SPCX. The plan is to raise $75 billion at a valuation of about $1.75 trillion. That would make it by far the largest IPO in history. Bulls are calling it a once-in-a-generation chance to invest in the world's first truly extraterrestrial company. But the first red flag is the valuation. Private funds already invested in SpaceX reportedly price it closer to $1.25 trillion. Last year, it was valued around $400 billion. Now the IPO is asking for nearly 5 times that older figure. That is a massive jump. The second problem is profitability. SpaceX reportedly made a loss of about $5 billion in 2025 and burned through over $4 billion in the first quarter of this year. Meanwhile, Meta is valued around $1.5 trillion and made $60 billion in profit in 2025. So the comparison raises a hard question: what exactly are investors paying for? Revenue makes the valuation look even more aggressive. SpaceX reportedly brought in slightly less than $20 billion in 2025. At a $1.75 trillion valuation, that means investors are being asked to pay more than 90 times revenue. That would put SpaceX at a price-to-revenue ratio no other trillion-dollar company is anywhere near. Then come the underwriters. Goldman Sachs is described as the main underwriter, with Morgan Stanley as a junior underwriter. Bullish forecasts were reportedly leaked days before the IPO. One forecast claimed AI revenue could rise 100-fold by 2030 and total revenue 25-fold. Another claimed SpaceX revenue could reach $3.4 trillion by 2040. The concern is not that banks are optimistic. The concern is how speculative the numbers look. The final issue is passive money. Big index providers reportedly changed fast entry rules that could let SpaceX into major indexes early. NASDAQ's new rule could allow entry after just 15 trading days. FTSE Russell, MSCI, and CRSP are also described as confirming fast entry rules. The result, at least $20 billion in passive money could be redirected into SpaceX stock in its first few weeks, and that leads to the biggest question: why go public at all? SpaceX already had access to private lenders and generous valuations. Going public means audits, financial statements, and more scrutiny. Maybe SpaceX needs huge capital for Mars, satellites, and off-world ambitions. Or maybe the IPO is designed to tap retail investors and passive funds at the perfect moment. Either way, this is not just a space story, it is a market structure story. For more technology stock story like this, subscribe to Briefing Block. We break down the number, the trend, and the story behind the trade.